Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions, and he just gave them a dire warning. Mark says we're about to witness a historic stock market shakeup that could soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history, and he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash.com. He includes the name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of beloved pet brand Chewy before it fell 45%, tech company Sea Limited before it fell 66%, furniture company Wayfair before it fell 76%, social media favorite Snap before it fell 36%, and food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the famous FANG stock fell 35%. So you'll want to avoid the stock in his new report immediately. Again, simply go to rollingcrash.com for your free copy of this new report. Hi, this is Daniela Cambone. Happy Wednesday and welcome back to the Daniela Cambone Show here on Stansberry Research. The market's still trying to digest the hawkish comments from Federal Reserve Chair Jerome Powell during the first day of his semi-annual monetary policy report to Congress. Here to talk about this and more is Chris Blasi. He's the CEO and president of Neptune Global Holdings. Chris joins us from Florida. Chris, so nice to meet you. Welcome to the show.
Well, thank you, Danielle. It's great to be on your show.
So curious to get your thoughts on Powell's comments here. You know, he noted that although inflation has fallen sharply from last year's 40-year highs, it still remains well above the central bank's 2% target. He affirmed that more rate hikes, despite the pause, are likely to come. Your take on his latest comments here, Chris?
Sure. So what I think is what you're seeing in a sharp sell-off in the markets, is particularly in the metals, over the last couple days. And I'm going to back up a little bit, right? Because I want to set the stage for where we are right now and what Powell is doing and what I think the market is seeing, right?
Please.
So we go,
yeah.
if you don't mind, we'll go back, prior to 2020, after the great financial crisis, there were extremely strong deflationary forces. And what did the Fed do, right? They came in with QE and they came in with zero interest rates. And it was kind of holding things off, but things weren't really turning around, right? They wanted to ignite some inflation. So come 2020, that event is used as, we'll say for whatever, they created global lockdowns, broke supply chains, started causing inflation and pricing in goods, and did a level of money printing and stimulus which was far greater than the prior period, 2008 to 2020. So they got the inflation they wanted. Now they want to put it down, temper it down. So in 2022, they start raising rates. So where we are now, I believe, is inflation is falling. The market is perceiving the rates are a little high and that the Fed is going to overdo it and that we're going to go into a recession. A lot of people talk soft landing. I don't think that's necessarily so. I think we're going to, and what you're seeing with the metals is recession. They're saying a recession is coming. Gold, very forward looking, and that we're going to end up with strong deflationary forces again. And then I don't want to go out too far in the future, but then in 2020, late 23, 24, we're going to see something else. We may be marching off to war. There's going to be another event. But so specific to your question, House talking hawkish. Market thinks he's going to overdo it, and the market is selling off in anticipation of a hard landing.
Curious to get more thoughts from you on why you think we're headed for deflation.
I think actually that was the strong forces prior, right?
Okay.
Meaning prior to 2020, after the financial crisis, deflation was the force that they were holding back, right? They never let the the market fully correct after 2008, right? It was always about supporting and using QE. And now with the inflation we got from the stimulus and the supply chain breakdown, we have, let's just look at housing, popped average of 40%. These numbers are unsustainable, right? The economy and wages can't support it. So there's going to be strong deflationary forces in certain sectors of the economy. If you look at commercial, okay, go ahead.
Right. No, I was going to say, because experts would push back and say, but there was so much money released into the system that you'll never be able to wear that out. That, so how would we get to deflation?
Well, there are other examples of unlimited money printing that deflation couldn't be held off, and that's like Japan, okay? So there was massive money printing after 2008. It wasn't really turning things around. It was just keeping it at bay. So the real forces are deflationary, all right? That is completely contrary to most, but we will see once we hit the recession, which we're actually, I believe we're already started, especially in certain regions of the country. You're also looking at a collapsing in prices in things like commercial real estate in marquee markets. That cannot happen without ripple effects and substantial ripple effects. So they're going to end up having to turn on the money printer again one way or another, because things are they're going to overshoot with their hawkishness. We're going to go into a recession. Deflation will start coming back, and then they're going to turn around and start money printing again. I think the metals are just saying that the recession is coming. And again, gold is forward looking, but in about a year and a half from now, they will be printing money again.
So, do you find it interesting when you see comments from Goldman Sachs warning that we're going to be in a mild recession? I mean, how does anyone really know how hard the recession or mild it will be until we're really in it, Chris?
Well, look, the statements from a lot of analysts have agendas behind it, right? And I think they're very smart people, but I don't think they're always going to say what's true. Just look at every event like the Great Financial Crisis. There wasn't a single we'll call mainstream organization that saw what was going to happen in the mortgage market from what happened prior to 2008. Right. Okay, so they are not going to go out and tell everyone the sky is falling. And I'm not saying this, the sky's going to fall, but it's going to be a much more severe recession, and it's going to be a lot more painful than you're hearing from the mainstream.
So let's talk about the pressure that we're seeing on the gold price today. When we started the year, there was so much enthusiasm surrounding the gold market. Obviously, as you know, I've been covering this market well over a decade here. So much enthusiasm this year, talk of $2,500, $3,000 gold by year end. What happened to that enthusiasm, basically? I mean, obviously, we need a higher price here, but what's it going to take to get gold back on a concentrated and consistent rally, Chris?
So when you take a step back, the one thing about gold is, from my experience, when certain news items come out, gold never reacts immediately the way people expect, right? There's a lagging effect. And I think a good example of that is the average person, if you said, how did gold do since the start of the new millennium versus the stock market? Most people will say the stock market outperformed. But we know, despite the days that it would get knocked down, that gold has outperformed the stock market. So gold is actually still trending. It's not breaking down and collapsing. And now on its march higher, because I've always made going back to 2004 and 5, gold entered a secular bull market beginning in the start of the new millennium. Started around 2001, 2002. It's a classic 3 legs. We're in leg 3. It's not collapsing. The higher prices that you just mentioned are going to be realized. I think as we get through the next several months, there's going to be lots of consolidation, because the focus is going to be on we're going into a recession, and the dollar has been rallying a little bit. So my point is, gold has not collapsed. gold is not failing. It's just not moving at the rate and the pace that its enthusiasts expect. But it has done exactly and has performed well since 2001, and it will continue. But for the next couple months, we're probably going to be consolidating and then trading sideways.
Is there a price forecast you work with?
So, yeah, that's an area a lot of people get in trouble. I think by the end of the year, we may get back up to 2,000. That's a big number, a psychological number. It has spent a little bit more time over 2,000 several months ago than it had the last two times it touched it. I do not see gold 3,000 by the end of this year. I think 2024 is going to be a bigger year for gold. But I would use this opportunity for people to accumulate and grow their positions. I wouldn't try to time the market too much because I think it's at a favorable price in this area. Whether it's $20, $30 cheaper, I don't think it's going to matter a couple of years from now. So,
Yep.
maybe back to 2,000 by the end of the year.
I'd appreciate your insights, Chris, because obviously you run a bullion dealer down in Florida. When I speak to my other friends at bullion dealers, they tell me that, despite kind of like this no man's land in gold price right now, the demand is still there. People are still buying gold. The interest is there. I mean, can you back that? Are you seeing that as well?
So what's interesting, so I've been doing this 21 years, and the profile of the buyer has changed a lot since March, once the banking crisis started. What I'm actually seeing is maybe some of the smaller investors are not involved. Okay, I actually are seeing, when you talk about the stress in the middle market, right, or the middle class, yeah. I'm seeing individuals who had long-time positions needing to liquidate parts of their positions for daily living. That's not a good sign. It's the high end, our big clients.
Yeah,
they are accumulating. It's actually, the market is becoming more bifurcated, right? So we're seeing some extremely large, ultra high net worth individuals taking substantial positions, moving away from large cash positions they had in the banking system. So that's what I'm seeing, right? It's just, we've always had the large buyers, but they are out in force now, and I see more stress with the middle.
Yeah. I'm absolutely hearing that, back that 100%. When you speak to them, Chris, I know you're not speaking to them on the phone directly, but obviously you're getting the feedback. What's their concern? Why do you think they want to move their wealth into gold now more than ever?
So I think, to me, gold moves on macroeconomic and geopolitical, right? Gold is money, right? Gold thrives in chaos. And there's, we're hearing all these messages, whether you want to call it propaganda or misinformation or disinformation. But the argument against gold taking off prior to a year and a half ago was always about the strength and the invincibility of the dollar, right? Being a little bit sarcastic, right? That the dollar was basically the gold standard, will be forever. The world can never break away from the dollar. And regardless of our shortcomings, it was the cleanest shirt in the laundry, or whatever, example they like to use. And of course, it was always said, well, maybe someday the world will move a little bit away from the dollar, but not in our lifetimes, right? And I'll call that a little bit of a normalcy bias. But what's other people are seeing in the last year is that, the world can move away from the dollar, and they are moving away from the dollar. Now, I hear people, still say, well, that doesn't matter. They'll always come back. I disagree, because 2 years ago, what's happening now, what you see with the BRICS plus, the realigning of nations, all of this was unfathomable 2 years ago, and it's happening. We're moving toward a more multipolar world. It's not going back. We see trading between nations and currencies. It's in the early stages, but they're actually moving rapidly. So the dollar's not going to go away, right? Unfortunately, some people go over extreme, but it will be diminished in its relevance and use.
Yeah.
And when you're at the top, that's enough to cause trouble. So the metals will thrive in that environment as this world changes.
It's really interesting, isn't it, Chris? Uh, 2 points I'd like to make there is one, because I've been hearing, well, who really makes up we know who makes up the BRICS and the countries who are applying to make up the BRICS. Other experts would just say, well, whatever, they don't count really on a global scale. But when you add all these countries up together as a whole, all of a sudden you're like, wait a second, we're dealing with a powerful force here, right? So much so that Janet Yellen was forced to comment on this last week. So we know the US dollar saw an 8% decline in its share of global reserves in '02, causing some to now question whether the dollar's days of dominance are over. So speaking to that, Yellen said, she still thinks there's no other currency that could displace the greenback, but she did warn that the dollar's share of global reserves may continue to decline as countries look to diversify. So I found this comment to be extremely interesting and strong, and almost it didn't get enough airplay, because for her to even comment on it and warn that, hey, this may be coming down the pipelines, I think is a huge deal. Would you not agree, Chris?
I do. And what you said, Daniela, is interesting. When you said to replace the dollar as the reserve currency, I think we're going into a transition period. Well, there isn't going to be one single currency that is the reserve currency of the world. I think you're going to see, for a period of time, a lot of trading between nations, as you see now, where China will buy resources from Russia using the yuan, and Saudi Arabia is taking payments in non-dollars, right? So the dollar isn't being replaced, but it's being chipped away because we'll call it a lot of side deals, right? Where you and I will exchange and trade using our local currencies or maybe some substitute in the future. So I think that's the mistake people think is
Yes.
you have to go from one reserve currency that dominates everything to another, and that there isn't an in-between. Well, maybe there will be in the future, but there's an in-between stage. And the in-between stages are chaotic. When you move from a unipolar to multipolar and a one currency to multicurrency, and that's a time of chaos. And let's go back. That's when gold thrives.
Let me go back to, you said 2024 could be a breakout year for gold. And you unfortunately mentioned war at the start of our conversation. How do you see that? Let's talk about this threat and how do you see that playing out? What does that look like for you?
Well, I'll just look at the same headlines most of us are looking at. It seems that, no one's hiding the fact that there seems to be prepping people for the idea of war in the Pacific theater, and maybe war spreading in Europe. Things aren't coming to a close over in the Ukraine, of course, and I think in a war, and we've had some other analysts that I think highly of, has basically said they will take us to war as the economy kind of falls apart. Right? First war was on a virus a couple of years ago, and next war looks like being more of the conventional sort. Right? So between elections coming up, and using maybe a conflict and a war, because the common belief is that everyone rallies around a wartime president, plus possible money printing as early as the middle of next year. I think all of this bodes well for precious metals.
Finally, Chris, before we wrap, I need to get your thoughts on silver. Just quickly, your take on what's happening with the silver price.
So silver is doing what it always does, moves much more violently than gold. We have seen a lot of purchasing of silver. It's a much more speculative position. We've experienced a lot of extreme, large silver purchases by clients, and it's its usual rough ride. So I think it's playing out as it usually does. Gold goes down, silver's going to go down at a multiple of that. And you just have to have a stomach if you want to be in silver. And I believe a good portfolio is a mix of gold and silver. I do believe there's good upside for silver, but just be prepared. It's a little bit more painful.
Chris Blasi of Neptune Global Holdings, thank you so much for joining us this Wednesday.
Thank you, Daniela.
Okay, we'll see you soon. And thank you for watching. We'll have more great content coming your way, so be sure to sign up at danielacamboni.com to stay on top of it all. That's it for me. We'll see you soon.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.